Kenya's cabinet has approved the creation of two key funds to cover the estimated $38 billion cost of a broad-ranging infrastructure investment program. The first is the National Infrastructure Fund. It will channel a combination of domestic savings, asset sales and privatization proceeds into major projects like airports, toll roads and power plants. At the same time, a sovereign wealth fund will also manage revenues from minerals, oil and public investments. Earlier this month, Kenya's finance minister said the proceeds from the government sale of a 15% stake in the telecommunications company Safaricom would provide the seed capital for these two funds. Alongside government funding, the funds will also be open to investors, including pension funds, sovereign partners, private equity companies and development finance institutions. There is, however, a curious duplication in infrastructure funds at this stage, with the sovereign wealth fund having an infrastructure fund within it. So why exactly is the Kenyan government intent on having two funds, which on paper, remember, are trying to solve the exact same problem? That's a question I put to Kenya's finance minister.
So that infrastructure, which is in the sovereign wealth fund, is separate from the National Infrastructure Fund, which is a standalone, which is going to be a company, limited liability company. So the, and by the way,
are we going to get legislation for that separately?
The company will be formed procedurally. You know, we already have government-owned enterprise bill law, which clearly spells out how to form limited companies, the government-owned enterprises which are commercially viable and the profit-making government enterprises. So that is where it will sit. There is that law in place. But if there will be need, because there is a thinking among some of us that we may need a standalone statute that borrows from the government-owned enterprises law and creates this entity, this institution, then that will also be picked up. But that is for the Attorney General to help us advise on that.
Are there any timelines on that? On when that
timelines
that
are
bill,
there. Actually,
that bill might
actually
come
we
forward?
want all this question around creating the fund to be ready by early next year, around February, March latest, because we want before we privatize the KPC and before we conclude the divestiture in Safaricom, we already have a company in place which will receive the bigger part of these proceeds. Something to note, the Sovereign Wealth Fund is primarily receiving money from, is supposed to get money from minerals and maybe oil and such like. Now, the privatization proceeds, the bulk of it will go to the National Infrastructure Fund, not the Sovereign Wealth Fund. In fact, the percentage that will go to Sovereign Wealth Fund may be just 10% or thereabout, but the bulk of it should go to this new vehicle.
So walk me through that thought process, because looking at the privatization pipeline, so there's this 15% sell down on Safaricom.
Yes.
There's Kenya pipeline, probably Q1, early Q2
yes,
next year.
Correct.
There's the minority stakes, the small ones that Cabinet approved to be sold in June 2024, you know, less than 5% in NSC, Stanbic Bank, Liberty Holdings, etc. I mean, at some point, there's not that much to sell. So thereafter, where's the capital going to come from that will continue going into the National Infrastructure Fund?
We don't need a continuous stream into that fund. What we need is a seed capital. So first, we will have the Safaricom, we'll have the KPC. There are others which we can offload some shares, like Kenyan. We have 70% of shareholding. We can reduce that to a lower percentage.
Is that the intent next year?
Well, I cannot put the timelines. It's something that has been discussed, not firmed up. Anything that's not firmed up still remains an idea. So all this, if we raise, for example, 500 billion shillings and put into this fund, that is a fund, that is just enough. Once you have a seed capital, this fund is going to attract investment, private investment, money from the private sector and institutional investors, private individuals and institutional investors. So what we are doing at the moment, each of the identified state departments are already coming up with the pipeline of projects which are commercially viable. For example, under roads, we look at the roads that can be tolled, and then we are looking at the irrigation, the dams to be done, how they can, they will be used for irrigation and power generation. There is also the energy generation and transmission. and the airport and many others. So all these...
But all those companies, if hypothetically, right, Africa 50 could come to you and say, we know you need a lot of investment in transmission,
Yes,
right?
yes.
And they could then say, well, we think based on your power development plan, it's viable for us to invest in a line from point A to point B. They can find the capital, they can fund it themselves. Why do we need an infrastructure fund when they can do that?
This is how you need it. Number one, the current arrangement for Africa 50, for example, to come in is through PPP model. Correct. PPP model has a lot of challenges. One of them is bureaucracy. And how long does it take to close a transaction under PPP model? Years and years.
But if it's publicly owned, right, it's still going to be subject to the same bureaucratic problems that you're talking about, isn't it?
Not really. This is going to the governance structure is going to be professionally done. You see, if you look at government-owned enterprises law now, it has clearly defined ways of getting the governance structure in place, how the board of management is going to be constituted, how it is supposed to be run. In terms of even procurement methods, is simpler, easy, transparent, and accountable.
Let me just pivot back to the Sovereign Wealth Fund for a moment, because in the other jurisdictions I've seen this work, Norway, for example.
Yes.
You've got countries that are running consistent fiscal surpluses, in some cases trade surpluses, quite a few of them. And in Kenya's case, over the last 10 years, we've been running consistently high fiscal deficits, sometimes as high as 7%. Yes. Trade surpluses, we don't have those. We're running trade deficits most of the time. So in terms of inflows that go into the Sovereign Wealth Fund, where's that money going to come from?
Well, you see, the way it's our Sovereign Wealth Fund is designed was in anticipation, in my view, of oil discovery. Yeah? So we don't have that luxury in Kenya, but we have some minerals. So what we are saying is the minerals that we have around in Kenya and the ones that we continue to discover. Look at what has happened in the mining sector in the first the first two quarters of the year. It has been growing very fast. In fact, the first quarter was at 5%, now 10%. And chances are that that sector may grow. The revenue or whatever resources that come from these minerals, we must put them in the national sovereign wealth fund.
But that's a big question, right? Because we had this money coming in from, say, for example, titanium mining, right, in Kwale.
Yes.
Base Titanium was operating there for quite a few years.
Yes. And we wasted the money.
Right, and that stopped.
Yes.
And we are not sitting on an ocean of oil like Nigeria.
Yes.
We don't have massive gas reserves like Tanzania does,
Correct.
for example. So in terms of the mineral endowment that Kenya has, it looks on paper, at least with the information we have now, it looks relatively small. So how much money really can you raise?
It is relatively small today. It may not be relatively small tomorrow. But you see, we have also identified that we may not have too much minerals here to be able to run that the Sovereign Wealth Fund. That's why a percentage of the privatization proceeds will go into that fund.